Hey guys, Mike here. So, oh boy, what a day in the market it was. And what do we talk about, right? Shouldn't be a surprise. Rotation, profit taking, right? Where was the fear and greed index at? Where's it at now? It's even higher, okay? So, things like that, it's going to happen. And, if we're in a bull market, guess what? Rotation is normal. If we're not in a bull market, then we're going to see what this is. And I'm actually going to cover that a little bit more tomorrow to show you something really important to look at to kind of see where we're at. But we're going to, and again, what I talk about. Yesterday I said these people bend over backwards, okay, to make sure they don't affect their market. I'm talking about the Treasury, the Fed, right? They put out a statement today. Try to tell you, that's what they're going to do. And even said the word in there that I said yesterday, carefully, right? And so we're going to go into all that. But I tell you, if you're a tech investor, which I tend to be heavily towards tech, you probably felt like these people in this kayak, they got swallowed up by a whale. And that's actually a true story last week. But don't worry, as those people are okay, which they are, tech investors will be okay too. Now, why are we not surprised this is happening? Well, I mean, look, I told you yesterday about the fear and greed, right? I even added this in now, so I want to start tracking it because it's such a big variance. But yeah, when you get to extreme greed, it never fails. You're going to have profit taking. And where's the extreme greed at, right? It's on the Nasdaq. That's where it's at. It's in tech, right? It's not in any other place. And so that's the one that's going to feel the brunt of this as we start to do rotation and profit taking and stuff like that. It's normal. This happens in every market. Now, I told you I'd keep you updated on the commercial real estate market anytime I come across data. And this data I saw right here shocked the heck out of me. I did not know this. I'm not in the commercial real estate business. And so those who are, I'm sure, are not shocked by this. But understand, the share of loans that are interest only by year of issuance. Look at this. You can see all those loans, right? Especially 2022 surprised me more than anything. Look at all those loans came out in 2022. But, and look at the percentage. And those who need a verbal on this, here you go. It's written down for you. And think about this. 2010, only 17% of the loans were interest only. Look at 2021, 88% were interest only. And in 2022, it was like at least 79 to 80 by looking at that chart, by 82% actually. And you got 1.5 trillion in commercial mortgage loans that are come due over the next 3 years, and interest only. So if rates stay high, man, I mean, those who got it, again, I don't know what commercial real estate loans go for versus like residential. I'm not an expert in that field. I'm just catching you up to date with what's happening here. But I can't imagine they're that low, okay? And, especially if you took them out in 2022 when rates were going up. And so that's just amazing to see, but I figured I'd catch you up on it. If you are in that business, let us know in the comments. And again, that is strictly, we're talking about like office buildings and things like that. Like apartment complexes are going up all over the place. They're doing well. Warehouses, I don't know about that one. I see a lot of empty warehouses, but especially the office building was just a hot mess right now. Now, I told you yesterday, these government entities bend over backwards for the market because it's their market. And of course, the Treasury issued a statement today, and here it is. You ready? Treasury assumes an end of June cash balance of $550 billion and end of September cash balance of $600 billion. Treasury now expects that its cash balance will be approximately $425 billion by the end of June. The cash balance is expected to increase in July and decline in August before approaching levels consistent with the cash balance by the end of September. Here's the key. You ready? Treasury will carefully monitor market conditions and adjust its issuance plans as appropriate. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so, like I told you guys, they're going to bend over backwards. Remember, who owns a lot of stocks? They do. Right? Government officials, heck, they basically day trade. They do more trades than you and I. So, no surprise there. So, yes, will there be an effect on liquidity? Yes, but is it going to be this shock to the system? It's going to run us down 30%. I'd be stunned, right? And that's why, because they're going to slowly, methodically do it, make sure everybody's informed. Because what tanks the market? Surprise, right? Uncertainty, right? Not that, because look what happened with the Fed rate hike. As soon as they knew what was going on, all of a sudden, woo, see you later. Even though they may do another rate hike, don't matter. We know what's going on. We're good now. We can see the end. All right, let's go, right? I mean, that's how this works. So they have planned this out methodically. Again, we'll see how it goes. And to me, the people, the things that are going to be affected the most is actually corporate bonds, right? So companies like on the Russell 2000, these smaller companies, that need it. Because a lot of money, they might say, instead of buying your bonds, who are pretty high risk in this environment, maybe we'll just go get a certain thing for 5 to 6%, whatever they're doing it for, and just go into the government bonds, right? So that is something to watch carefully for sure. Now, what happened today in the markets? Well, let's see here. Is it a surprise that Q sold off 1.81%? But wait a minute. The IWM was up 1.7. That's almost a swap, isn't it? Well, and understand when it comes to S&P, the reason why it didn't drop farther, because obviously it's a much more diversified. What happened? Energy stocks go up. So you had oil stocks go up. Bank stocks went up. Travel stocks went up. And so that's what saved the S&P going down more than 0.5%. And when it comes to the Qs, guys, I mean, also you got to keep this in mind. It had its longest rally since 2021, right? 6 straight weeks. That is a rare thing to see. And so you have to get a breather at some point in time in there. It can still go green for the week. It can go parabolic Thursday, Friday, and boom, we end green again, right? And of course, what else we're seeing? Well, of course, we get record inflows into what? Tech by a country mile. I mean, look at that right there where it was. And then, I mean, look at what the norm is, right? And so look at the 4-week average versus where it was. The biggest inflow in history for tech. And a lot of that had to do with the AI stuff, right? That's what it had to do with. And so you got this big flow, which that's why you've seen this big push up in the Qs and a lot of charts looking like they're vertical and everything and defying gravity. Now, the rotation here, you can see this, and all you got to do is whatever somebody was asking about this, how you get these or whatever, just go in whatever platform you're on, type in XLB, XTN, XLE, save them in, some kind of list is what I do. And then you can go in and you literally can visually see the rotation when it's happening and stuff. And doesn't mean this is going to continue. This is short term. This is what's happening right now. This is just in June, right? We're only 7 days into June. But you can see, obviously, tech at the bottom. You got healthcare trying to get out of its own way. TJX, if you have another ticker symbol you like better than that, let me know. But this is consumer cyclicals, right? These are the cyclical stocks. Consumer discretionary is the same thing. These are things we don't need, right, which I talked about. But you can see that right there is trying to make a move up. But the big ones are going to be your financials. You got your materials. You got your energy, your industrials. And so that's the one that's trying to make a bigger move up right now. But you can see if we zoom in to just the last couple of days, especially today, you can see even a bigger separation, right? And so you see your ones that are down and you see the ones that are up, right? Feel free to type those tickers in and see what all those actually are. But, it's no different than what I basically just mentioned to you. And so you can see that rotation happening. And, speaking of, obviously the love that the Russell got today, you can see 2 huge daily candles right here as it moves up and trying to get to that next supply zone up there, which of course we've been stuck in the supply zone for a long time, which I'll show you. But you can see still has room to run. The RSI on the daily, MACD's looking good across that 0 line we talked about. But you can see it's been over a year, guys. And so is it finally time for this to break out? Because that's one thing about the Russell. It loves to trade in a range for long periods of time. We were stuck in this thing from 2021 all the way to 2022, a whole year right there, right? And you keep going back and you'll see the same thing right here. Same thing, a year, and then it finally moves either down or up, one of the two. And so it's been a year, so maybe it's finally time, that we finally get a move out of this thing. And of course, when we break down on a smaller time frame, the hourly, overbought, MACD's looking definitely extended. Could find, use a little pullback when you're going up 1.5 to 2%, 2 days in a row. You definitely need a little breather here. But understand a couple things happen on the Russell. One, you're getting short squeezes, right? Because Dave and Buster, for example, that trades on the IWM. This thing, remember, this is a restaurant/entertainment place, right? And up over 25% this morning on earnings. Okay, not a tech stock, a restaurant. But why? Because it has a small market cap versus a lot of others, right? And it's sitting there like 11 to 16% shorted float, right? It don't have a big float to begin with. So it only takes a little bump to get things rolling, all right? What else? A lot of bank stocks on the Russell 2000 and Russell 3000. So what are you seeing? Look at all this green. I'm just going to scroll it on down for you. Green, 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 green. Hundreds upon hundreds, right, are green, which is going to move you up. It has some red, but I think it's like 82% of the stocks today on the Russell 2000 were actually green. Now, what has to change on the Russell 2000? This right here. Percentage of stocks setting new 52-week highs at 5%. Hopefully this will change today a little bit, but that has to change, right? I mean, you go through the list here, you can see in any bottom we've had, whether it was the .com, whether it was 08, they were way ahead of it by now when they had bottomed. It's just because this is the first time we're hitting a bottom in a high rate environment, in an environment that sucks for smaller companies because they have to take out so much debt to keep rolling, right? So it affects them more. And the bigger boys like to roll into something more certain like an Apple or Nvidia or whatever it is. And the Russell 2000 stocks aren't going to like benefit from the AI hype, right? They're not going to do that. And so you got to keep that in mind. They got technology, but not Nvidia and all them, not AMD or Palantir or anything like that. So keep that in mind. And of course, what else did we see today that we had talked about, right? And some people got upset about it, but it's normal. Profit taking, especially these AI companies that are going straight up. What was one today? Palantir, right? That's been a very popular one. But let me tell you, that is not normal on a daily chart. That's not normal, okay? That's like 20 days, right? Look at the MACD, or I'm sorry, look at the RSI. Look at the MACD, right? And what happened? It ran into a brick wall at $17. That's a huge supply zone right there that goes all the way back to its IPO days, okay? And you can see to the penny it hit that thing, and it rejected right on off, okay? And again, when that happened, people say, oh, I'm out of here, because it ran up so fast. People were making so much money so fast, so quickly, they're easily, out of these positions because that's not normal. And we go to a smaller time frame, you see what I'm talking about, right? As soon as it hit up there at 17, bam, dropped 15%, just like that, the rest of the day. See you later. Found support at 14 though, and that's where a support level is, so maybe it'll catch a bid there. Good thing is, when we look at it on the hourly, it didn't leave a bunch of gaps behind. It did, but it filled them, right? Which is a good thing. You don't want to leave a bunch of gaps behind like Apple did, right? So now there's only like one small one at the very bottom, like all the way around 10. And then, of course, the big one between like 8 and 9. And so the good thing is, though, till you get to 10, there is no gaps to fill. So that's actually a positive thing for this stock. All right, but again, getting a breather. We'll see where it goes from here. It's hard to tell these AI stocks and everything, right? And then when you look at them, it's not the only one. Anything to do with software, AI, whatever it was taking a breather today. I mean, Datadog's been on a huge run, down 8%. Snow got destroyed at 7%. China, of course, Chinese stocks went down like crazy, all their tech stocks, because, they had some bad data come out about their economy and stuff, and it's slowing. So, boom, they took a skid. But, again, what's another one? Nvidia, right? Huge move, obviously. And it's only down 10% over the last 8 days. But, again, once it hit that top, it's been tough, but it's still, again, because those aren't normal. See the MACD, see the RSI on a daily? No, that's not normal. And so, of course, it still has not sat there and even touched that gap yet, right? And so we'll have to see if it gets a short-term, maybe oversold bounce on the shorter-term time frames. But, yeah, this is one that a lot of people you can guarantee are trying to short and buy puts on still. So maybe they'll finally get what they want. But then you look at Tesla, green day. It actually started off ripping this morning. But this is what I told you yesterday. I was waiting on that trend line right there to see how it would react. And, of course, it rejected with a quickness off there. It held it, trying to push through it, couldn't do it. And this is a big trend line. it's rejected 1, 2, 3, 4 times off this thing as it's been trying to move up. And so will it finally bust through? We'll have to see, but that right there is a large move in a short amount of time, right? 29% in 13 days. That is a huge move. Again, a lot of call buying going on in Tesla. The sweepers were just hitting the ground this morning for sure, and it pushed it all the way up to that trend line quickly this morning. And part of the news was when all the Model 3 Teslas qualify for the tax credit. Now, of course, I'm not going to make the same mistake I made last time. There is, my understanding, an income qualification too. So once you reach a certain bracket, you're out. You're not going to get your tax credit. But they were saying if you can qualify for all the credits you get in the states and from federal and all that good stuff, you can get one for like $24,000 or something, which sounds mind-boggling to me. But it's like, if you can, hey, 24,000, you kidding me? Wow, okay then. That's not bad at all compared to what they used to be, right? So we'll have to see. If you happen to know what the income brackets are and you want to put in the comments for everybody, let us know. We definitely appreciate it. But, looking at some data coming out tomorrow economically, though, that could affect markets absolutely is going to be the jobs, right? You're sitting here with a continuous jobless claims, initial jobless claim, and of course jobless claim 4-week average. So this is what people do look at to see, are these interest rates finally taking effect and slowing things down or not? And of course the Fed looks at this stuff, as the same as well. And I'll have a lot more economic data tomorrow. Some of it's just stunning to me when you look at it. And again, it usually takes 12 months, as somebody put in the comments, which is true, 12 to 18 months before you feel the effect of higher interest rates. Again, it's just not going to be the same with all these shortages, you know, in employment and housing and energy. It's just not going to be felt the same, right? It's going to me, take a lot longer, right? Again, what we do for the first time in history, we shut down the world. Never been done before, as far as I know. We had to open up the world, throws everything off, right? So remember, that's what the cyclicals, for example, they really rely on the business cycle, right? Or economic cycle, whichever one you like to say. And so, you know, and these are your things you don't have to do. You don't have to travel. You don't have to sit there and go buy Nikes or anything like that, but they're the ones that depend on that. So if you see them start to turn up, you know, keep an eye on that and take note, okay? And again, we'll watch this rotation to see if it continues because, you know, the IWM moving up hardcore in the last couple of days. We'll see if that pace continues or not. But again, I always say when short covering's all over, right? That's what you wait for. You wait for the short covering to be all over. You know, everybody trying to pile in to see what kind of market you're actually in. Okay, and so, and I'll show you something on the Qs tomorrow because they have to make a big decision, right? And you'll see why some people are very hesitant at a certain level. Okay, so just keep that in mind and stuff. So hope you got something out of it, guys. Hit the like and subscribe button if you did. I really appreciate it. Appreciate all your support, watching the videos, sharing the videos. You guys are awesome as always, and I'll see you guys tomorrow.